tips? I usually give tips at restaurants for good service. How do I buy tips? Hey guys, thanks so much for checking out our channel where we do our best to make money simple. So today we're talking about tips. That's Treasury Inflation Protected Securities. Tips are bonds issued by the US government that offer protection against inflation, in addition to some modest interest payments. Now specifically today, I want to dive into a little more about what they are, how they work, the advantages and disadvantages, some ways to buy them, how they are taxed, and finally, whether or not they may be good for you to buy. This is not investing advice, so please make sure you do your own research. I have already shared briefly a little bit about what tips are, but let's talk a little more about them. According to Wes Krill, head of investment strategist at Dimensional Fund Advisors in Austin, Texas, for investors who prioritize preserving the purchasing power of their cash, tips can help mitigate the impact of unexpectedly high inflation. Tips are fixed income securities that work in the same way as other treasury bonds. When you buy tips, you are buying debt issued by the US government.
I don't want to be in your debt.
You get regular interest payments on the par value of the securities, and you get your principal back when the tips reach maturity. Now you might be asking yourself, what is par value? So let me tell you. Par value is the face amount or face value written on the front of the bond. This is the amount of money that the bond issuers promise to be repaid. What's unique about tips is that it provides inflation protection. The value of ordinary bonds, which typically feature fixed par values, may be eroded over time by gains in inflation. Indexing the bond's value to inflation helps protect investors from loss in purchasing power. Now, while the interest rate remains constant over the duration of your tips, the interest payment you receive every 6 months is based on your tip's current par value, meaning they effectively increase with CPI inflation. One thing to note is that deflation will reduce the par value of tips. Now that said, this is a very rare situation to occur. What's not a rare situation to occur is for you to smash that like button. Also, don't forget to subscribe. Seriously though, click that too so you can stay up to date when we release future videos. I had to break this video up a little bit. It's a little hard to understand. All right, now that you're subscribed, let's get back into tips. Let's take a look at some advantages to buying tips. First is the fact that tips are almost like insurance to inflation. If you're looking for a hedge against inflation, or maybe you're, a more conservative or income-seeking investor, tips may be just for you. Another advantage is that tips are backed by the full faith and credit of the US federal government. In other words, it is highly unlikely that the US government will fail to pay you back.
You better pay me what you owe me, Mike.
If you need to sell your tips before the term ends, it should be fairly easy to do so. Like almost anything, there are some disadvantages to tips. First, tips tend to have poor performance during deflation or low inflation periods. That's because deflation or low inflation drags down the par value, shrinking interest payments. Second is the unpredictable cash flow. And this is because their payments are dependent on inflation. It's hard to estimate in advance what your income might be. Third are anticipatory taxes. Because you must pay income taxes on any increases to par value, you could end up owing phantom taxes on money you haven't actually earned until your tips mature. You can combat this by holding your tips in tax-advantaged retirement accounts. Fourth is liquidity. Tips don't trade as much as other bonds in secondary markets, which make it harder to sell yours quickly. And finally, CPI may not match your personal inflation rate. Tips are tied to CPI, and if your spending habits don't completely align with the averages used to measure CPI, inflation adjustments may not compensate for you or your spending patterns. Now that we discussed some advantages and disadvantages of tips, let's talk about some ways to invest in tips. The first way is that you can buy them directly through your online broker. If you choose to purchase tips through your online broker, be sure to compare how much the current inflation adjusted par value differs from the original par value. Remember, you are only guaranteed to receive payment up to the original face value of your tips. If its price is above the issue price, you could lose money if deflation drags the par value to less than you paid. What that means is that you'll probably only want to buy tips on a secondary market if the current par value is less than the issued par value. Otherwise, your safest bet may be purchasing tips directly from the Treasury. And that is the second way to buy tips. You can buy them directly from the treasurydirect.gov website. And you could also invest in tips ETFs, exchange traded funds. With a tips ETF, you'll get more, diversified tips, but keep in mind you will also have to pay the expense ratio fees involved with ETFs. Now, if you find yourself maybe interested in investing in tips ETFs, here are 3 you may want to look into. STIP, STIP, which is iShares 0 to 5 year tips bond ETF. VTIP, VTIP, which is the Vanguard short-term inflation protected securities ETF. And RINF, RINF, which is ProShares inflation expectations. I'm not going to go into further detail on those. I just wanted to mention those so that maybe you can go ahead and check them out for yourself. Now let's talk briefly about tips and taxes. As with most investments, tips earnings are subject to taxes, at least the federal taxes. Now, earnings are generally exempt from state and local taxes. However, you do have to be careful with tips because their earnings encompass their interest payments and any inflation adjustments that increase their par value. According to Robert Johnson, in any year when the principal value of a tips bond increases due to the inflation adjustment, that gain is considered reportable income for the year, even though the investor won't receive the inflation-adjusted principal until the security matures. You want to be sure to plan for this in advance, as it could create a small tax burden for you. Definitely speak with a tax professional about how tips may affect your taxes. Finally, let's talk about probably the most important question I'm sure you're thinking about, which is it a good idea to buy tips now? If you're a conservative investor who wants some government-backed protection against inflation, tips can make solid sense. As inflation is high, causing your expenses to go up, the extra return from tips can offset that. Before buying your tips though, be sure to compare current bond yields to expected inflation rates. Tips adjust for inflation, so interest rates tend to be much smaller than non-tips bonds. As an example, if bonds are yielding 4%, inflation is only 3%, and tips interest is 0.5%, you would only expect to earn the equivalent of 3.5% on your tips. And that is for each year. This could make it, a much less greater choice to the non-tips treasury bond. I really hope that makes sense to you. As always, I really do try to explain things as simply to you as I can, so I hope you found some value in this video about tips. Please smash that like button, it means a great deal to me. Thanks so much for watching, and I will see you in the next video.